Thank you everyone for coming. We're going to talk about statistics.
Yeah. Hi, I'm here.
We're going to talk about statistics, foreclosures, short sales, home trends, anything that anyone has a question about. Just stop, interrupt, interject. Roy's going to chime in a bunch too because he loves statistics also. And we'll just go through this stuff. So if you have any questions, just bring it up and we'll figure out where to go, what to do. As was already mentioned right here, this is your 2-year median price graph for the monthly dynamics. What's really interesting, if you look, your for sales are down, where? Oh, I didn't even get mine back.
You want this, Anton?
Yeah, awesome. Your for sales are down 23.8%, your solds are down 19.2% in the last 2 years. I point this out every time. What's really interesting about that, that means your average seller is basically, 4% overpriced relative to the market, if you think about it like that. Otherwise, they would have sold and they'd be under the sold column. The under contract is also outpacing the sold. In other words, these people have had to reduce their prices more to get it sold than if they had just priced it correctly to begin with.
So state that like in real people's terms so I can understand that better.
Lower your price, price it correct, or otherwise you're going to sit on the market and it's going to cost you money.
Perfect.
And statistically across the board, NAR's number says that you're going to lose 12 percentage points more in price by pricing it over market and having to chase the market down versus pricing it at market and selling. You're actually going to get under a price that you would have been if you had originally priced it correctly. 12%.
Because you're hanging out for so long.
Yeah, because it's the old brown banana syndrome, right? Sitting on the shelf too long.
It's a delayed sale.
Chasing the rate price. Where you're chasing the market down instead of leading it down.
Great analogy. Todd likes it. Roy Chambers is the one who has said this. If a ball is rolling down a hill, where do you run to? Do you run to where the ball was, or do you have to run to a destination that's ahead of the ball in order to catch it? So it's great to think about it like that. Also, for me, I'm very blunt. Mr. and Mrs. Seller, if you want to pay someone thousands of dollars a month, why not just give the money to me? Because what you're doing right now is you're just basically lighting money on fire. Somebody mentioned that this, is a telltale. If you go back sometime in third quarter of 07, our local market peaked. Since then, we've come down about 33%, maybe slightly more by now. I haven't actually gone back and looked that far. But third quarter of 07 was when the market peaked.
I want a set, so if anybody else wants copies, they can make them themselves.
Oh, can I have some, Darcy?
No.
There you are, sir.
Thank you, Anton.
Yeah, that just cost me how much money?
Yeah, statistically, when I've gone back and looked at that number, Anton, it's actually a 40-month drop, and it's an average of 1 percentage point a month, and so we're about, to date, about 40% off from the peak of our market in 2007. Wow.
Okay, any questions about that one? Okay, we were talking about this earlier. You can't see the actual numbers. Oh well, you guys have got them in front of you. We're looking at the market dynamics slide. Roy was in a multiple offer situation. 4 of our properties got multiple offers last week. 4.5 months worth of supply. What is that?
Seller's market.
Absolutely. What's a neutral market?
6.
Okay, above 6, what is it?
Buyers.
Supposed to be.
Supposed to be, yeah, absolutely. So,
Wait a second, why'd you say supposed to be?
Well, is it? I mean, we're basically under a balanced market right now, correct?
Correct.
So would you, knowing statistically that 6 months is a balanced market, meaning that neither buyer nor seller has an advantage in any transaction, who has the advantage in most transactions today?
I'd still say the buyer.
The buyer. So doesn't that fly in the face of what normally a balanced market would be?
Yeah, why does that fly in the face?
Because of consumer confidence. So if more buyers got off their stumps and got into the market, that would actually drive the prices up.
Interesting.
So I think you have to look at why aren't they doing that, and I think that comes back to unemployment.
Right.
Yeah, because I looked today and unemployment in the county for March of 2011 was at 10.1.
10.1, so we've gone up slightly.
Well,
Went up,
but
3
but there again, the question is that number the true number?
Not if
Because
you
it doesn't
factor
take
in the self-employed people.
Right, so they,
Or people who ran
Self-employed
out.
and,
ran the benefits.
and underemployment and people who can no longer receive unemployment benefits.
so true unemployment, the way the rag sheets say, is 17 to 18%.
Yeah, plus all the illegals that went back. I mean, honestly. Seriously. Think
I
about
don't
all
know
the, all those
anything about that number, but but statistically, I mean, that's what most experts believe is that our true unemployment number is somewhere around 17 or 18%.
Really interesting, and this is something that you need to be pointing out to both your buyers and your sellers. You look at just right here, this is basically May of last year, we had 11.9 months worth of inventory. Months of inventory can also be thought of as the number of sellers per buyer. So in other words, almost 12 sellers per every one buyer. We've on a consistent downward trend, and right now we're down to 4.5 months of supply measured by these statistics. So if you're a seller, what are we going to tell our sellers today?
I don't know.
It's a good time.
You
to
better
sell
do it
because
now
it's
before we get another spike.
Amen, get it on the market now and get sold.
Yeah.
Because we are going to have another influx
it's a pattern
of
too, you know.
foreclosures
Starts to drop,
and
it spikes up, starts to drop.
Okay, and what are we going to tell our buyers?
Buy now.
Buy now.
Mr. and Mrs. Buyer, you may be competing in a multiple offer situation and you may have to offer the best price for this property if there are competing offers or if the home is priced aggressively. Is that something you're okay with? Is that something you feel comfortable with doing in today's market? Yes, I know you do have a VA where you could use a 0 down, but we may have to go 10% down because the VA loan is maybe not going to be as strong as one of the other offers. Okay, so by knowing the months of inventory, we can have that consultation with them up front and saying, you know, be prepared, under 200, you're going to have multiple offers.
Well, I think the interesting thing to look at too is that, you know, we've constantly looked at other states that have been 18 months ahead of us in this curve, right? So Arizona, Nevada, California. So if you take a look at what's happening right now in Arizona, anything under 400,000 is actually appreciating.
San Diego, San Francisco appreciated last
Appreciate.
year.
So we have to fast forward and say, okay, if we're 18 months behind, are we really coming to the bottom of our little run here as far as decrease in prices?
Huh.
You know, some could argue yes, some could argue no. Statistically, Anton will share here a little bit ago is when NAR polled real estate agents.
Let's talk about it right now.
Well, real estate agents, 51% said that we were going to rise 0 to 5%, and 42% said prices were going to fall. That's kind of like half say yes and half say no, right?
No, they don't know what they're talking about.
Well, the point is that you can see from statistics how nobody clearly knows whether we're done falling or not. But if we look at other states that have been through this, my speculation is we're getting pretty close to the bottom of what this is. Now, does that mean we have another 18 months? Heck, I don't know. But the reality is that it's a pretty fast-paced market right now. If you're working with buyers, you know that. I think Anton's point is a good one.
So this is the National Association of Realtors. This is on the website. You can go there and get it. I'll have Sandy email it to everyone too. Basically what they did is they took Region 12, which is
Canada.
But Washington, Idaho, Oregon, Montana, and Alaska.
Right.
okay, correct. So they polled a bunch of real estate agents and they said, what do you think about pricing? Where's it going to go? Okay, this side is falling, this side is rising. We're almost at like a 50-50 mix. Now, I don't know why 50% of the people would say it's rising. In our area, I would say we're going to fall. Okay, we're still on the falling side. But it's really interesting, if you're polling across the big chunk of the United States right there, you're split.
Well, but that's what I was saying. So if you could go to the leading indicator states that fell first, that went into this recession and correction first, again, Nevada, Arizona, California, and Florida, what you're seeing is those markets under 400 are seeing appreciation. If you're a real estate agent today in those markets, what would you say? You know, you would say prices are gonna rise.
Yeah.
Right.
That's what you would be telling people, right?
I agree.
Because that's exactly what's happening. Now, over 400,000, that's not happening. So big dollar ticket, properties, it's just not selling. And I think the reason is, and I'm seeing this with people I'm working with, how many people do you know that are moving from something worth $1 million trying to get into something worth 500,000?
Yeah.
I mean, there's a whole market of just marketing to those people that are
Yeah.
trying to move down.
Yeah, dumping it taking a loss just to get into a better financial situation. We've also had it where people have paid the difference in their existing home to go buy the home of their dreams. Todd, you had one of those too.
Yeah.
They paid $35,000
Yep.
to move.
Yep.
So they paid $35,000 to move out of their house because the one they were going to move it up into
They say
was
200 grand.
Yeah.
It's crazy.
exactly.
Yeah, is it? Or smart like a fox?
Yeah.
Yeah.
Yeah, because they're gonna get the best value as the
And it's
price
a
is
home of their
rise.
dreams, right? So, I mean, does that mean that they're gonna stay in their property, and do they care if the market goes up or down slightly over the next 18, 24, 36 months? No, not in the long run. That's a great move.
Yeah.
The other awesome graph that they had in this report, discount below market value. The maroon would be the foreclosures and the kind of yellowish color is short sales. So, and this is once again a polling of practitioners that are realtors. They said that, in second quarter 2010, 23 and 18%. What's interesting is they're saying in 2011, that's what I think is interesting, it has like a downward trend that short sales and REOs are being discounted less in order to get them to sell. So there may be other parts of the country too who are experiencing lower amounts of inventory just like us. Todd, you're scratching your head.
They're discounted less because they want to discount them more to get them to sell. Oh,
No,
They don't have to.
they're finding on average that they have to discount them less in order to generate a sale.
Over where they were previously.
Over where they were previously. See how the
Okay.
graph is trending downward?
Yep.
Because we have a decrease in inventory.
Because we have a decrease in inventory.
got it.
But because remember, this is a larger report than what we're talking about here in Snohomish County. That's a decrease in inventory across all those states. Or at least they're feeling it. Questions, thoughts, ideas? I didn't pull that one. We should talk about that one, huh?
Go ahead.
Here, I'll put it up.
This is my favorite one. I use this one on every appointment.
I like that one too.
Putting it in your perspective,
Awesome.
Look at that.
Comes with the same packet.
So Sandy emails these out to
Sandy emails
everyone.
them.
You get an email too.
Yeah, if you go into your email and you type April and then sandylarue@kw.com.
These are all shot out.
Yeah,
Every month.
here, go ahead. You do a better job of explaining this one than I do.
There you got it.
Here, rock and roll.
Well,
You can't know it until you teach it.
Ooh,
Oh.
go ahead, Anton.
Call out.
It's all you, babe.
Why is it with people calling me out?
it's, I think the challenge is on.
The challenge is on. For me personally, what I love about these is when you look at the pockets that's available. So you look at the pockets of the active listings, but which ones are turning over the most? Okay, so for instance, you come down here in the over $1 million. You've got 82 and only 2 of them sold. I don't want to take a listing that's $1 million.
They didn't sell. They went pending.
Yeah, they went pending. They're under
We
contract.
only sold one. Go over 2 columns.
Yeah, and then we sold 1.
Right.
So I've got 1 chance in 82 of selling that listing in Snohomish County.
Not good odds.
Not good odds.
Well, and only 50% if it actually even goes pending.
Your best,
Nice.
I love it. Your best odds right here are in the $200,000 to $250,000. There's 600 active listings. 190 of them went pending in the last 30 days, and 141 of them sold. Okay. You've also got pretty low days on market at 111.
See guys, I think this chart gives you 2 different things that you can use with your sellers. You ever had a seller that said to you, is anything selling?
Yeah.
Oh, yeah, nothing's selling.
Nothing selling. You would bring this in, right? Wouldn't you just bring this in and say, they're here in price approximately, and when you say, well, Mr. Seller, certainly they are. There's 689 and 95 of them sold in the last 30 days. What 95 do you think sold, Mr. Seller?
Price, correct.
the ones that were priced correctly, right? So you can use that, because then you can come back and say, so Mr. Seller, what do you think these 104 were that expired? What do you think they were?
Too high.
Overpriced.
Not priced correctly. So do you want to sit on the market to be expired, or do you want to sit on the market to sell? And so this is a great tool. Second thing, then you can come back with them, or just to yourself with maybe a little bit, is to go, what listings do I want to take? To me, and I know that Jennifer, when she pulls listings for me, I've got a set price range. I'm not pulling over 450.
Why waste your time?
Why do I want to do that? Why do I want to sit up here and spend all my hard-earned dollars marketing stuff up here when I can be here in the sweet spot and work in this batch? Because to me, those are the ones that make sense, right?
Yeah.
So I think, guys, as realtors, we got to decide, the listings that we take. We got to proactively look at what's selling and decide what do we want.
I think it's my
Your
favorite
business.
range, the under 100,000.
Yeah.
Yeah, I got a few of them in there.
They have their own set of problems.
Oh, I know it.
We do too.
They're doing better.
I know.
Over five.
True, good point. Yeah.
And they don't want ask for much.
The under 100,000s
though?
though?
A bunch of fluffy stuff.
Poof, gone.
Yeah, they are gone quick.
I mean, literally, as long as you can finance it, that's always a question. You put them on the market, they disappear.
Yeah.
I got an email from a gentleman, and he said, "Is this property still available?" It's in the Berry Farm. It's a 2-1, 666 square feet. I said, "Yeah, I've already got one offer. Isn't it crazy that when your dad built these homes, this is now selling for $30,000 less than they did brand new. So it's on the market for $99,000. That's house sold for $129,000 brand new in 2003. And it's still good. It's in good condition. That's the funny thing. It's not beat up. I mean, you could like shampoo the carpet, maybe put some paint on the inside, and it would look like $1 million. So right
Well,
now,
actually $91,000.
yeah, exactly. So right now, if you're really thinking about it, we have gone past 2003 prices. We are somewhere in that 2001, 2002 pricing. Another gentleman called me about a listing we have over here on 64th, who works for a different company. He said, "Hey, I'd like to sit that property as an open house." And I said, "Yeah, go right ahead. I'm more than happy to let you do that." And he said, "I worked for Madison Homes, who was the home builder on those homes. I sold that home brand new in 1992 for $126,000. It's on the market right now for $139,000.
Well, I think this, guys, is, remember, from 2001 to 2006, we really had an overcorrection in the market, right? It corrected the wrong way, and it went way too far. What do you think we have now?
Same deal.
Same
An
deal.
overcorrection the other way.
And we probably
But-
won't see this type of major weird activity for another 30, 40, 50
We hope we never see this again.
I know.
You will
Still,
probably
I'm
never
saying
see
not
this
in-
again, just because what happened was lending criteria got so relaxed that you fogged the mirror. We got you a loan, bankruptcy, not a problem. Oh, you haven't had a job, that's fine too. State your income. Oh, you're self-employed, you make 20 grand a month, don't you? Well, I'm serious. Okay, I'm dead serious. It's bad.
That's exactly what's happening.
When I bought my first house, stated income, I couldn't afford the stupid payment. I mean, I made it through. I wasn't a foreclosure statistic, but basically I was just a waiter waiting tables, state income. Yeah, I make a lot of money. Go ahead. I had a 780 credit score, and they said, "Here, have a bunch of money." It's a bad loan. That type of lending criteria will most likely never come back, and we may also see the nationalization of Fannie and Freddie. Okay? There's really big push inside Congress right now to nationalize those two institutions or just get rid of them completely.
When you say nationalize those two, what does that mean?
Well, they're GSEs right now, which is a government-sponsored entity. What that means is you are a corporation with oversight.
Okay.
Okay, so what they've talked about though is they talked about sucking it all the way in and making an actual, just straight government entity, or getting rid of them. If we didn't have Fannie and Freddie as a secondary market, the only loans that would be going out would be 20, 25% down, and they'd all be held by your local banks.
Just like the old days.
Just like the old days.
Just prior to 74.
Yeah. So that securitization is what really caused the boom and the relaxation in criteria. I don't think as a country we'll ever really let that happen again. I'm not saying we're not going to have boom and bust cycles, because that has to naturally happen. I don't think you're going to see the large appreciations and the huge depreciation we're seeing right now. This goes right into Realty Track. They released a, where is it? Right here. They released a report this morning saying there were foreclosure sales, 158,434 across the nation in the first quarter. And what that means, when you look at it, is that foreclosure sales are slightly down, and that based on the total number of foreclosures that have been foreclosed on and the number that's being sold, Realty Track estimates that we have approximately a 3-year supply.
Wow.
So you're talking about REO sales, you're not talking about auctions.
I'm talking about REO sales, correct. The general public uses the word foreclosure, REO, bank-owned, all synonymously. Bank-owned, foreclosure auction is what they term the general public for the actual auction that happens at the steps. So if we've got almost 3 years of supply in foreclosures, why would the number of foreclosure sales go down in first quarter? What would be reasons, external stimulus?
Thanks.
Pushing them off, hoping for market correction.
They're pushing them off, hoping for market correction.
They're being sold?
Excuse me?
They're being sold?
Well, if they're being sold, then the number in first quarter would have been higher than it was in fourth.
Why? You're killing me. Come on.
Well, I want everyone to think about this. The robo-signing epidemic stopped a lot of major institutions in November and December, and they halted their foreclosure process. And they went back through to revisit that foreclosure process. So most likely what we're seeing in first quarter was there were properties that did not get foreclosed on because the foreclosure process was halted, so therefore they did not come on the market. It's the only thing that I can think of as to why it would go down. Or it's just an anomaly.
In fact, we internally, we were talking on several different meetings, we thought that the inventory would spike dramatically with the inventory that's sitting out there that hasn't been put on the market yet in the first quarter of the year, and in fact, that didn't happen. But we know for a fact that the banks are sitting and the lending institutions are sitting on tons of inventory, so why are they sitting on it? What do you think?
Waiting for the price?
Government's meeting.
I don't think so. Well, kind of in a way, you know, one theory might be
Well,
though.
half and half.
Hmm?
Half and half, for sure, are being kind of more scrutinized.
Yeah, possibly, but
Yeah.
one thought that might be happening, of course, is that they're worried about their ratios and their indebtedness ratios. If they're reporting these as non-performing assets, what does that do to the bank? It values the bank, right? So could it be that they're artificially sending out foreclosures because of their own financial situation?
So they look good on paper. Because the second that they bring back an asset, then mark-to-market accounting rules kick in, and they have to then change the balance sheet. Mark-to-market accounting rules right now, though, are suspended. So even though they know it's worth 200 and they've got it on the books for 350, they don't have to write it down until they foreclose.
So no foreclose, they don't have a problem.
So,
They'd be more lax on their short sale
well, I
process and more efficient, I think.
I think what they're doing is you're trying to do more short sales, you're trying to do more modifications, you're kicking the can down the field. The foreclosure timeline in the state of Washington is basically supposed to be like 6 months, and right now we're averaging 13. Okay? And so that's double of what it should be, and the only reason for that would be loan mods, short sales, and they just plain don't want to foreclose. We have a short sale with IndyMac Bank, and every time we turn an offer in, they just, oh yeah, thank you, and then the foreclosure date goes away. Now, they don't actually approve an offer at an acceptable price. That's a whole different story. But they keep kicking the foreclosure date down the field. They've done it 3 times now. I'm on offer number 4.
As long as you're in contract.
As long as I'm in contract.
Even if it doesn't stick.
Yeah.
But you know, it's interesting, the same report that Anton's got up here, if you go into it, you know, Nevada's got 53% of all the state sales are in the foreclosed area. 53%.
cow.
So if you're a realtor, what do you think you sell? You better be selling foreclosures, because otherwise you're not in business, right?
What's our stat?
Well, we,
Well,
We're like-
well, that's what I'm getting to. So California and Arizona account for 45%.
Yeah, I think we're down.
And so other states where foreclosed sales accounted for at least 1/3 of all sales did not include Washington.
huh,
We're coming down the pipe.
because we're 18 months behind.
Exactly.
We were late to the party.
Yeah, a lot of people started experiencing the downturn in '05 and '06.
Yeah.
What was the difference of the downturn in those bigger states though, as far as median price?
California in some places has come down as much as 55%, Florida in some
What are
places.
we?
About non-recourse.
40%.
40% on the
Yeah.
average now.
Okay.
Yeah.
Because I think again, that higher drop is why there was more so fast.
But remember though, what we said a minute ago about, we went to an overcorrection on the upside, though we've gone to an overcorrection on the downside.
Right.
Do you know that in the 2001 to 2006 timeframe, we didn't raise 40%?
Right.
So that means we're below 2001 pricing, right?
Yeah.
And then you see those other states, I think they rose substantially higher. than that.
Absolutely. I mean,
And that, again, we thought we were overinflated, they were like way overinflated.
I mean, I'm a poster child. I own a house in
Yeah.
Arizona. I
Yeah.
spent $300,000 for it. It's worth $150 today.
And Nevada was even worse, because
Okay, so let's, hold on, let's focus back. So how is this helping us make money? How is this, the stats? I want,
It's helping you to understand the market because people are moving out from out of town. They're moving in from other places. They're also thinking about relocating maybe to Arizona right now or Florida where it's cheap, where you can go buy a condo in Florida. I literally just went and looked on the MLS. You can go buy a condo in Florida for $28,000. It's 1,100 square feet.
I've had calls from people in Canada too, looking to invest in rental properties and stuff.
Yes, ma'am.
We had an artificial high,
Yeah.
we have an artificial low. If you trend out, normal appreciation had the subprime market never came into play. We are below that level.
Yeah.
My question to everybody in this class is, if you're an investor, is there ever a better time in history to buy? Okay, question number two. Question number two. How many of you people in the room know people that are ultra conservative that are sitting on a large amount of cash right now and they're unsure what to do with it? No, we may not have it ourselves, but the question is if we put our thoughts to it and say, who do we know that does have cash? And if we are a master in stats and we can share with them to invest and buy rental properties, there's not a, talk to Joseph, your rents are going up, your demand is going up, they're renting just like that.
It's a great way to diversify your future retirement.
Yeah.
There's three major things that are happening right now in relation to investment properties. What are they? I mean, Mike's already started to hit on them, but let's just nail them all down so everyone knows how to have this conversation. Rental demand is increasing because people are being kicked out of their properties due to a foreclosure, a short sale, or something like that, and then they have to go rent. They were paying $2,500 a month and they need to pay $15, or they need to pay $16 or $17. So rental demand is increasing. Multifamily is the only source of the commercial market that has shown growth according to the Swanepoel Trends report. Oh,
Wow.
yeah, more.
Yeah, the Reese report just indicated that vacancies have actually started to decline in the first quarter in large commercial properties that are inside metropolitan areas. So what that's saying is that vacancies are actually down 14.5% if you're sitting in Seattle. However, if you were sitting in Marysville and you were in commercial, they've gone up 19.1% vacancies. So interesting that but remember, everything starts from those core areas.
Right,
right?
oh,
Right.
if we see that, then it usually goes here.
Eventually, it'll
It just-
get to our share of the onion,
Right.
yeah.
So you have increased rental demand, you have extremely low pricing right now, which is probably below the norm. For the first time in the last 15 years, Snohomish County is starting to cash flow for real estate. Real estate did not cash flow before then. So as an investor, you come in, you put 20% down, you have a cash flowing asset that you've bought at a 45-year low interest rate. how do you lose? People bet that in the stock market all day long just based on the trend that they think it's gonna bounce.
So what is the interest rate on investment?
5.25%?
Non-owner occupied.
Probably.
Non-owner occupied.
Here's the thing to understand,
Yeah.
you have two schools here. If you're an investor that owns 10 or less financed properties, then you're able to get secondary market loans. If that's the case, then you're usually about a half a point spread from whatever an owner occupied interest rate is. They're gonna be looking usually 25 to 30% down. If you're over 10 properties, then you're gonna be going to a commercial loan, and it's kind of whatever you can negotiate with your different banks. But where this market is prime is especially for the people that don't have the over 10 properties. You can get them secondary market loans and help coach them through that process. And I guarantee you, if you do a little bit of digging, you're going to find a lot of people sitting on cash in the sidelines. I just put a transaction together a couple of weeks ago with a gentleman that's very, very conservative, and I just hit him right between the eyes. He became a partner in the transaction with me, and it was just a matter of saying, you've talked about investments. Do you have your checkbook ready right now?
Is that conservative attorney that I know?
Yes, it is.
To add to this also, be thinking about the person who's going to be the owner-occupied investor too. That's an extremely good way to do something right now. FHA will allow the 1 to 4 unit, VA will allow the 1 to 4 unit multifamily. So, does USDA? Can't remember.
I don't know.
I don't think USDA does, but FHA, so 3.5% down. Plus, you could probably do that in conjunction with a house key or some sort of down payment assistance. So literally, owner occupied, 0 down, someone else is helping to foot the bill.
And only stay in it for a few years, you'll have a rental
Live in it
history
for a
on
few
it.
years and then,
Couple of years,
Yeah, do
you'll
it
have
again.
a rental and you can
That's
go
what
buy
you're
whatever
doing.
you want.
But you know, Todd asked the question, what's important about all this dust? But I think that we skimmed too quickly over the idea, though, that people are looking to buy properties in Arizona, for example, or some other place that maybe is warmer. But an interesting statistic that we haven't talked about is that in the last 4 years, the foreign investor used to only be 4% of the total market in residential home sales in the United States. It was only 4%. It's doubled in 4 years. Now you'd say, well, that's only 8%. 8% of everything sold that's residential real estate today is a foreign investor. Now, is that a market that might be important for you?
Yeah.
I got a quick question. You know what? There's a bunch of Japanese people that are going to be moving to the Seattle area. What have we done? Because they want to be out of Japan and they want to move to a different place.
A smart realtor might want to take a look at that.
That's correct.
Are you learning to speak Japanese?
Skoshi.
I think there's a lot of opportunity, and I agree with Roy. We're seeing more phone calls where it's a 604 number coming in. That's BC, and he says, "Hey, actually, this was a lead that Greg was working on. He said, hey, I'm a doctor up here. Here's my website. Here's all my stuff. You can check me out. I'll send you my proof of payments. Is that property still available?" I mean, he didn't know it needed $80,000 worth of work, but, you know.
Duplex flyers at the outlet mall. We've been handing out the wrong flyers.
Well, but I mean, that's a great point. So we've got a division of the Van Winkle team in Arizona, and she's selling, 1 in 10 is somebody from Canada, from BC. Pretty big thing.
Yeah.
The Canadian real estate market did not crash. It did this little beep, and then it was like, oh, just kidding. And it went right back
Because
up.
they have a whole
Which was-
different,
Which
like,
is
lending.
a lot like Alaska, by the way.
Yes.
Alaska didn't have the same issues. So when you look at Alaska's numbers, that's the reason they're different.
Okay, let's bang through this part right here too. So Snohomish County statistics, basically April of 2011. I can barely read with that. No, I got this one. We had 592 sales last month as compared to April of 2010, which was 749.
Wow.
We're down 21% in the total number of transactions in April.
Trick question though, what were you from 2009 to 2010 as far as increase or decrease?
It was an increase.
You guys
Why
get all
don't-
these
why?
statistics?
Come on.
Because of the Obama $8,000 tax
The
credit.
home buyer credit.
We were up 66.8% from 2009 to 2010.
In April,
In April.
because that was the last, second to last.
So in other words, we're still up 40% over '09. So
Right.
we're still looking better, we're just not as good as the artificially inflated
Correct.
market due to the buyer credit.
So is it a good time to go list your property if you're Mr. Seller?
Yeah.
Yes, it is.
Yeah.
Yeah.
Okay, average price, when we compare April to April, down 14.7%. Year-to-date, down 11.6. Median price, down 16.9, and the year-to-date, down 12.6. Why would the median be lower, or excuse me, experience more depreciation than the average? And what's the difference between median and average?
Ask that first question one more time.
How come the median experienced 16.9% depreciation, the average only experienced 14.7?
Does the high-end homes?
High-end homes depreciated more. Median is the middle. Average is the total is all the properties divided by the total. So if the middle is moving, that means something on the up or the bottom is moving faster. Well, as we already talked about earlier, the $100,000 properties disappear in days. So it's most likely not the bottom. And we saw that only one property over $1 million out of 82 sold in the last 30 days.
I was just looking at a property for a CMA that's out at Priest Point. It's been on the market now for 3 years. 1.6 million it started, it just sold for $722,000. It's not a short sale. It's not a foreclosure.
That little white font right on the water?
No,
Down
no.
there?
Wow.
But the point is that that's proving what Anton was just saying is that's a huge drop.
Dropped $1 million
So-
in 3 years.
You're
Not quite
representing,
900,000.
you're representing a seller who's got that home that's priced above the median, because remember, this is going to affect above the median more. So anything that's over 232, you need to have a more stringent dialogue with them, especially as they start to get into those $4, $5, and $6, and $700,000 price ranges, because they're going to experience more of the bloodbath than the people who are below that median price.
Hit them right between the eyes.
I think it's, hey, Mr. and Mrs. Seller, your house has cancer, what do you want to do about it? Yeah.
Well, but again, though, there's good news in this, right? And we said that a minute ago, what Todd was talking about with his people. If you're going to move in this market, yeah, you're going to take a beating on the house you're selling, but guess what? You're going to get a great value on what you're buying. So don't look at it as a negative, look at it as a positive.
And you could probably basically go into any of the price brackets, so they're selling in the 200s, and then you can take them up into the 3s, and you can show them how this property has depreciated less than this one, and how it's a much better time for them to purchase that up property than at any other point, specifically also with the 45-year low interest rates.
And they might not have been able to afford it when it was $450,000, it's $300,000 today.
Are interest rates going to stay under 5%?
No.
Why?
Because it's been artificially
Inflationary
held down.
pressure.
Okay, inflationary pressure, I really agree with that one. It's been, how do they artificially hold it down?
I don't know how they do that.
The government's
Just know
been
that
keeping
they've
it
been-
down.
They didn't raise the
They've been
rates.
capping it, yeah.
Quantitative
But
easing or
the
something?
money the government loans to the
They've
institutions.
been using quantitative easing. Okay, quantitative easing, to put it as simple as humanly possible, because it's the most complex thing they could ever think of. We took all those bad mortgages, they went to the Fed. Well, some people are still paying on their bad mortgages, so it's kicking off cash. They take the cash, they go buy treasury bonds for themselves. It's money going around in a circle, forces interest rates down. Okay? But they only got permission to do it for the second time. So that ends in June, I believe. So as that ends, and they're not forcing hundreds of millions of dollars around in a circle to buy down T-bills, they're naturally going to have to rise. However, what they're going to try and do to stop things like that is they'll keep the Fed fund rate low, and that's the rate which a bank like Chase goes and borrows from the Fed. Okay? They'll try and keep that low, in order to help keep interest rates low. But they won't be able to control it and keep it historically low much longer because inflation will pop up. And didn't we just see possibly maybe some hint of inflation because gas is over $4? Okay. I know that's tied to OPEC and stuff like that, so we don't want to go down that. But when you see commodities start to spike in prices like that, when gold is at an unbelievable high, those are indicators that there is inflationary pressure on pricing.
Well, I guess another question to ask though is this a good thing that rates are as low as they are?
Yes, it
Well-
still encourages purchasing.
But if you have money where I used to get like 5.5% on my money market, and now, I mean, so all of that is secular.
So let me ask you a different
No,
question.
you're on the right track though.
So let me ask you a different question. What do you think will happen to the availability of money when the rates do go up?
Not to the availability.
Yeah.
It won't be as available.
No.
Well,
Toby,
It's the opposite.
Toby, today I'm going to pay you 0.5% to give me your money.
Mm-hmm.
In 60 days, I'm going to pay you 5% to give me your money. Much more willing are you going to be to give me your money?
Now or then? Or now would be
You're
less
taking-
willing,
And then,
more willing.
Supply of money is going
And
to go up.
people
supply
that-
of money, exactly.
So see, everybody says the rates being down are a good thing for us. I would argue that to a certain degree is true, but the problem with that is it also tightens up money when that happens. And what do we need as an industry in order to make things move? Because we need banks to lend.
Yeah.
And banks are not going to lend until what happens?
Interest rates go up.
They can make more money.
Yeah, they can make money.
and
Well,
There's also, though, it also opens up the door for investments that pay more money.
Yep.
And
Right.
people will leave their money in their investments instead of
and they'll be
buying
making,
houses for investments.
they'll be making money off their
So
investments.
it goes the other way.
Sure.
I mean,
Yeah.
they'll
Yeah,
less
so-
money because, I mean, if you're making money on your stocks or your investments, or your different bank investments, people that are more conservative are gonna say, oh, this is a good thing. So,
By nature, are Americans conservative with their money or no?
Well, the beauty of it is that if the interest rates start to go up, people are gonna buy quicker. They're gonna be freaked out.
Well, they're gonna be spiking anyway, they'll creep up.
hopefully.
Yeah.
What are historic interest rates?
8?
Absolutely correct.
Yeah.
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 Is that-
Now, if you take them since we started charting them in the early 1900s, interest rates have averaged 8. And then if you look at where we're at in the early 2000s and even just a year and a half ago, we were really in the 6s.
In 97, I bought my house, it was like 6, 7, 8 or something like that.
Well, I remember in 1981 when we were buying our second house that I told my wife if we ever see 10% real estate interest rates again, that we would be fat, dumb, and happy.
Yeah. Because you were paying 14 or something.
Yeah.
Well, remember when the 80s
Yeah.
were?
Yeah.
And they got all the way up to 80.
17,
Yeah.
yeah.
Yeah, so everything's relative, guys. Everything's relative. So.
Okay, one last thing I just want to go through and then